Hey, students, friends, family, real life traders from all over the world. I hope you're doing simply sensational. It's me again, Jeremy Alexander Newsom, and I want to make this video in regards to Fibonacci. Now, Fibonacci, there are a lot of things that can go into Fibs. Truly, I've seen 8 classes, 4 classes, 16 classes, 48 classes on just Fibonacci alone. And it's really, really good, obviously, and it honestly is. But at the end of it, people still walk away, traders like yourself still walk away and say to themselves, how can I use this and apply this to my trading to make more money? I just don't see how I can use this. I understand what Fibs are, but I don't know how to use this. Well, that's really what I'm going to try to do. My goal is to help you understand how you could use this and what Fibonacci analysis means to you. So Fibonacci analysis is, in my opinion, it gives you and shows you a visual representation of human comfortability. What I mean by that is it explains our human nature and tendency to do certain things at certain locations because it just magically feels right. That's kind of my way of putting it anyway. What I mean by that is, let's imagine, ladies and gentlemen, that you bought Apple shares right about here in the green arrow. Okay? You bought shares, the stock continues higher, and you sell right about here somewhere. Okay? Why? Why would you sell there? Well, think about it. If you bought here, after a certain amount of time, right, the stock comes in, rolls in, you feel that's a healthy retracement, the stock goes higher and higher and higher, and right about here, you just feel like that's a good place to sell. I mean, as a matter of fact, as I was drawing the line, you probably were thinking, okay, it's going up, it's going up, it's going up, it's going up. This right about here starts to get uncomfortable. You're saying to yourself, man, it really needs to pull back. You can't just draw a straight line like that very long in the market without something happening. And then, of course, it does retrace, which again is healthy. So if we're talking about, I now just need to spell healthy right. Healthy. Okay. Healthy. So if we're talking about trading, remember in the most recent class of this mastery section, class number 2, we talked about Elliott wave. Well, Elliott wave is also the visual representation of human comfortability as it relates to waves and momentum in the market. So wave 3 oftentimes has the most momentum. So this could really be a small 1, 2, 3, 4, 5. Where wave 3 has all of the momentum. It could also look something like 1, 2, 3, 4, 5. And you get some type of ABC correction, right? So again, where wave 3 has a lot of the momentum. So Elliott wave and Fibonacci do work pretty good hand in hand together. And what I'm going to do right now is I'm going to simply show you using tradingview.com. Great website. I totally suggest using it if you get the opportunity to do so. It's free. It's great for beginning traders, and also, traders like myself who are pros. TradingView is a great platform to use, and I'm using the free version so you guys get an idea of how simplistic and easy it is to use. But what I'm going to do is I'm going to show you where to find the Fibonacci tools. Now, Fibonacci tools might be over here somewhere. It might initially look like a pitchfork, but you're going to come down here to where it says Fib retracement. And I'm going to go ahead and draw some retracement on this really quick, and then I'm going to give you guys some additional information. Okay, so right about there. Now, what we're looking at are 2 things in particular. A lot of you are going to say, how in the heck do I know how to draw that candle, and how do I know how to choose that candle? Well, when you're drawing Fibonacci, ladies and gentlemen, you are, again, more or less looking for waves. You're trying to determine where did the wave start, aka also known as where in the world did the move actually begin. So ladies and gentlemen, can we look back to this orange location, at least somewhere right around here, and say, yep, ever since then, the stock has been moving higher and higher and higher. So would it be okay to say that, yeah, right about there, that's where the move began? That's where it started, right about that location. And I would say, yeah, absolutely. Okay, cool. Now, what about where did the stock begin to pause? Where did it move and slow down? Well, again, if we measure and we draw a 1, 2, 3, 4, 5, if this is some type of small ABC correction, then the wave 5 is often the top of the wave. So what you're looking for when you begin to draw your Fibonacci is the black candle that signifies that the trade is done, or the wave is done, or the momentum is done. It's a black candle that pretty much says, yeah, this is a really good place for the stock to pause, because that's exactly what happened. The stock did pause there, okay? Now, so that's kind of 2 points, and we're going to work on this and do some more practice with this Fibs. But another really, really cool key to have is to get your 50% line to find a gap. If you can get your 0.50 Fibonacci line to be in a gap or right on a candle, that really, really is a nice little bonus. Now, what I'm going to do is show you how to change the properties on the Fib. And this is pretty much with every charting software. You'll initially have to go in and change it. I personally use the 382, the 1, and I don't think we need these two up here. I think we can add one more. Let's add 1 382, and let's add 1.5. 1.5. And we don't necessarily need all these colors. That's totally up to you guys if you want the colors to be like that. It can be, but it's a little much. It's a little much for me. So let's just make it, I wonder how we can turn the covers off. Let's see, background. Oh, there we go. Okay. So background, levels, all right. I'm just kind of looking at this. Prices, so we can turn the prices off. Okay, so let's just all make them for the moment. Let's just make them all green. Sure, let's just make them all green. I just want to kind of get something standard, and so this way at least you guys can kind of see how how I'm using it, and you can adjust it. That's another reason why I do like TradingView. It's actually, in my opinion, pretty counterintuitive. All right, so I'm gonna press. Let's see what this template thing. Save as Fib. All right, very cool. So, oops, we forgot one, the 0.764. These numbers, again, without going into a giant drawn-out process of what these numbers are are Fibonacci numbers. They're Fibonacci sequences. They're ratios that mean a lot in human psyche, even though sometimes we don't necessarily know it or think about it. And again, I'm going to prove it to you. Now remember when I mentioned right about here, if you bought back here, right about this location, you begin to start feeling uncomfortable with the trade, or you'd start feeling a little bit like it's gone too far. That's the 1.618 extension of this wave. What you're doing is you're looking at this wave and you are extending it into the future to see, and you're asking yourself really this question: how far can the buyers continue to buy the stock forward into the future? How much momentum do the buyers have? That's really what question you're answering when you do a Fib. And when you do this Fib, you'll notice that, again, the 0.5 coincides perfectly with that gap, and then the stock trades come down, comes up, and then it trades to the 1.618. My question to you, ladies and gentlemen, is would that have been a good target? I mean, how would you have known to sell right here? And the answer is you probably wouldn't have known exactly to sell right there. I mean, you never really sell at the very, very, very top. That's your goal, of course. But Fibonacci gives you a really, really good way of projecting future price targets. I mean, ladies and gentlemen, would it really have been so terrible for you to exit the trade right there? Understanding this is probably the end of some type of wave. Let the stock retrace. So, right, you're totally exited out of the trade. And then you can get back in right about there. Is that really so wrong to believe? And my theory is no. It's really not that difficult, right? Really not that hard to comprehend that that is a really good location to exit. Is at a target, right? It gives you a predetermined location. Now, here's what's really cool. Check out where the 2.618 is. The 2.618 is 105.06. And we're trading very, very, very close to 105.06 right now. So again, 105.06 is telling you that's a really, really good resistance. Now, I can say some things for sure. Usually Fibonacci analysis lines up just a little bit better than this. A little bit better. So what I'm going to do, I'm going to come in and format it. And then we're going to add the 2.5. Okay, we'll make that green. And then I believe we will add ourselves the 2.382. And these are all extensions of the first wave. Okay. And so now we'll be able to see that here is the 2 Give me one moment. Well, let's just hop over to here. If I use a crosshair, look at that, ladies and gentlemen. Look at that. The high of this candle right here. So at this point, this is the all-time high on Apple. The high of this day is approximately 103.69 and some change. That's pretty phenomenal, if I do say so myself. So again, this fib, this wave right here, just this bullish propulsion, you are literally saying, what is 2.5 times the strength of that momentum? 2.5 times the strength of that momentum is the high of that candle right there. Now, again, could that have given you some really, really good interpretations and some understandings of, all right, this is a great place for me to sell, take some profit, and I therefore do not have to worry about all of this hoopla, right? All of this sideways movement. I can get out and kind of wait for the stock to do its thing. And I would, in my opinion, say absolutely. Well, okay, let's do this again. Let's try to find another wave on Apple. And let's ask ourselves, what about this wave right here? How far did this wave get extended forward to right about here? And I would say, and my guess is probably the 1382. It'll probably be pretty close to that. But let's just go ahead and find out. So we can take this line and we can bring it up to the 0. And then we'll take this range and we'll bring it up to here. Right about there. Perfect. And so again, that's giving us an extension of this wave. Now this is again, which is quite fascinating right now on this wave. The 1618 extension of this wave is right here. Right about there. So let's also add the 2. So this is actually the first time I'm using, I usually use another fib tool. Let's see if I can add another line. I don't think I can. I think I'm out. That might be as many lines as I can add. I'm sure if we upgrade, we can add a few more. Extend lines. Oh, okay, we could do that. That'd be fun. All right, we'll use that for right now. So what I was doing is I was hoping to find the 2, and the 2 wave would probably be right about there. So here's what's interesting, ladies and gentlemen. Honestly, if the lines don't line up that well, because you really should have almost picture perfect touches when you have a wave, you're probably dealing with a wave that's not the correct wave. So let's kind of come back and look at this wave and see if using the beginning of this candle right there, this, and this, much better. Much better. So we can use this wave and we can see if we were extending it, how it appears to look. And it appears if we're using this wave, all right, again, we're asking ourselves, where did the candle stop? Well, the candle stopped right there. Where did the wave begin? The wave began right there. Now that we have that data, let's ask another question. Did the 0.5 line go through a gap? The answer is yes. The 0.5 line went through a gap. I think that's a great piece of information. So what could that tell us about this particular wave, this particular extension? Well, I'll give you some information. What if this stock, Apple, breaks and closes above 104? What if we break above 104? Do we have any future targets on Apple? And the answer is, yeah, we do. So Fibonacci is a great way to find targets on a stock that's trading at an all-time high. It really is a good way to find some additional targets, to use at an all-time high. So that's one of the ways that you can use Fibonacci, right? Find the candles that begin and end the move, and you can draw a range from them. So let's do another example. Let's say that you're looking for a bullish wave, ladies and gentlemen. Which candle is more likely to have started the bullish wave? Is it this candle? Is it this candle? Or is it this candle? Which of these 3 candles are most likely to have started the bullish wave? And the answer is obviously green. Green is more than likely the candle that created the wave, and I would agree with you. Which candle is the one that most likely ended it? Would it be the one in black? Is it the one in orange, or is it the one in pink? Now, this one might be a little bit tougher. I honestly think the black candle, this giant long day black candle, actually is in fact the candle that began the bearish move. Now, how can we tell that? Well, the reason we can tell that, ladies and gentlemen, is because the stock did not move and has not moved bullish since that point. So what does that mean for us? Well, what it means is that we can do a Fibonacci retracement. So what I just did right here when we measured them forward, it's called a Fib extension. So in using the Fibonacci extension, again, you are literally extending the waves to see how far they will go in the future to give you some targets. Now, when you draw Fib extensions, what you'll also notice is that you have some additional lines. So let's use these lines right here. So using these lines, we can see that using this Fibonacci extension, if we break through this high, we have some targets. Now, this is the range that I'm measuring. And this black candle, I'm saying, is the candle that started the bearish move. Now, obviously, ladies and gentlemen, we can use our common sense and say that this is 61.8% retracement of this in red right here, okay? So the orange lines is 61.8% retracement. When you're using the extension tool, the ratios are flipped, okay? Ratios are flipped. So what you're literally saying is that it is retracing up to, and you only have 30.382% of your initial wave left to retrace. That's how you can think of it, okay? So as it's retracing, this is the this line is literally saying, okay, you have retraced and you have 61.8% farther to go before you retrace the entire line. So let me do it in different colors. Here's the green, and in red it's saying if we retrace, so right here is a 50% retracement, and down here is a 61.8% retracement of the green level. So the green level is literally saying you have 38.2% left before you retrace all of me. Now, here's something that's important in Fibonacci to remember, ladies and gentlemen. If you create a wave, that wave, the beginning of that wave should not get broken. If the beginning of this wave gets broken, meaning the open of that wave gets taken out somehow, something is wrong. And when I say something is wrong, it's probably your analysis, which is okay. That's going to happen from time to time. Or it means that the market is changing radically. Something pretty drastic is changing. So what these lines help you do is understand and give you some additional locations that the wave will retrace. So if this is the bullish wave, this is the bearish retracements. These green lines gives you locations that are good to know where the stock could be pulling back to. So that way it gives you a zone of comfortability if you don't, in essence. So what I mean by that is, ladies and gentlemen, as long as Apple stays above 94.16 and realistically stays and does not close below this particular retracement level, this bullish wave is intact. And what that means, ladies and gentlemen, is simply the wave, if we break bullish and we continue to move higher, so let's say Apple in the next 3 weeks closes above here, there's a very, very good chance that these green levels and these green levels will act as a resistance or a target, aka they will be very, very good locations to sell at a target. And I'm very, very interested to see if that does indeed play out in the future. But really, that's how fibs work. Now, if we want to, we can also combine this again with some Elliott wave and in determining what exactly and how far something could move. So again, if we're looking for a wave 3 in Elliott wave, and I've mentioned that this could be a 1, 2, 3. Obviously, this is a giant wave. And I would say to you, yeah, you're absolutely correct. That's a giant wave. So this wave should be able to determine the giant wave of wave 3, where that wave might stop. So let's practice this really quick. Let's come in here, fib, and let's go from here all the way to here. There we go. Give me one moment. What if we come all the way to the bottom? What does that look like? All right, so what I'm doing is I'm coming all the way to the bottom of the range, and I'm looking to see if I can put the 50% line, which is right here, in some type of gap. Oops, I'm drawing it twice. Here we go. Where did the bearishness start? Because oftentimes, ladies and gentlemen, the very, very top and the very, very bottom are not the correct answers. Oftentimes, we need to go and search a little bit farther for the wave. And this might be it right there. I do like this right about there. What I like about this so much is if we're looking at this as a wave, this wave retraced 38.2% of that wave. And so it's telling you that, hey, I got 61.8% retracement more to go before something's wrong. And you can see that it did trade and did pull back at the 1618, which is a really, really nice resistance. And right in the middle of the 1618 and the 2382 is the 2. I kind of ran out of room, so I didn't have the ability to add the 2, which is kind of saddening. But either way, we came to the 2. Now, here's what's very interesting. Notice that there are some fib levels that line up. The 2618 of this wave right here and the 2618 of this wave right here, they both are within 20 cents of each other. Ladies and gentlemen, what do you think? Do you think 117, based on some of those fib projections, would be a good target? And I would say, as of now, yes, absolutely. That's going to be a very, very good target on Apple. So again, that's a really, really big wave. And you can measure big waves, you can measure small waves. It all depends on your time frame, your perspective, and maybe how long you're looking to be in the trade. Let's kind of come over here to this little tool in TradingView, and it's kind of fun because you can see some of the Elliott waves and Elliott wave cycles. This is actually the first time I'm using this. Let's see how this works. All right, so 1, 2. Okay, so you can draw it out like that. That's kind of fun. And so using these Elliott wave drawings, you can actually draw out your own Elliott wave patterns, so you can see how something will move and all that jazz. Oops, now I have lines all over my chart. I got to delete them. So delete that one. I'll delete this one. We'll delete this one. Perfect. So here's what we could do, ladies and gentlemen. What we could do is, looking at these waves, when you draw your waves, you can always go in and measure your individual Elliott waves to see how they're coinciding with the move. So let's just do that. Based on the wave that I just drew, kind of freehand pretty quickly, let's just come in here and draw and practice drawing some waves. So these green lines, you want these green lines to act as a support, and you want these green lines up here to act as a target. So, ladies and gentlemen, did these green lines act as a support? Yes. Did we trade to a target? Yes. Could you have, based on this candle by itself right there, and on top of the fact that you could have, you could believe that, all right, the wave 5 was over, this was a correction, and now we're beginning some other type of bullish wave. Could you have bought right there? I would say, yeah, absolutely. You would have had the understanding that you could have bought right there. All right, what about another wave? Let's do this wave down here. Let's do from wave 2 to 3 as I have it drawn. So wave 2 to 3. Notice right here, it comes down, the green lines become a support, and we trade right to the 382, the 1382 fib target. So here's a really good resistance. We trade back down, and you guys, get the idea, so on and so forth. So you start piecing these things together, Elliott wave and Fibonacci. What you'll come up with are two things, ladies and gentlemen, and these are the most important things. You will come up with a framework of where you should be buying, where you should be selling, and the why behind it. And from here, it just takes a little bit of practice. So the good news is, ladies and gentlemen, that I'm always going to be here to help you and understand so that you get an idea of what really you can use these for and how you can use them. The good news is I want to just kind of get you an idea that this information exists, but still the main source of information that I'm going to be basing all of my trades on in our live trading room when you guys join me for that is going to be candles, gaps, and the sentiment and the why, the understanding of the why would someone buy and why would someone sell. Those are still the most important aspects of trading. The fibs and the Elliott wave, it's one of those things where I will say to myself, if I'm doing a real life trade. Okay, Jeremy, this appears to be a 1, 2, 3, 1, 2, 3, 4, 5, correction, 1, 2, 3, 4. And I'll say, you know what? I think we're at the end of a wave 4. I would love for a reversal candle pattern to shape up. Ladies and gentlemen, did we get a reversal candle pattern to shape up right about there? And the answer is, of course, we did. Phenomenal morning star reversal pattern. Could we have entered right there? Could we have placed a stop right there? And the answer is yes, we could have absolutely done that. Could we have measured this fib range from here to here and realized that we retraced about 50% of that wave? And the answer is, of course, yes. You could have done all of that. But what you need to understand is behind everything is the why. Why are you buying here, and what is the sentiment behind it? And again, this is just momentum. This is people who are bullish. This is profit takers. And this wave right here are people likely who failed to get in back there, who want to start catching the moves, and they begin to hop on and take the train even farther. So it's the candles and the sentiment that are the building blocks on everything, on our fibs, on our Elliott waves, on our chart patterns. So it's imperative to understand the candlesticks, the location, and really getting a grasp on the why they begin to form. So what we're going to do in the next class is give you a little bit more of an advanced mastery on some option strategies, because when we start talking a little bit about option strategies, and I'm going to give you a nice overview of some of them, you'll get an idea again of the what you could do at specific locations, because sometimes it's just better to be not bullish rather than directionally bullish, and there are specific there's very specific option strategies that can help you in that specific direction, and depending on if the market is bullish or if it's just simply bullish to neutral, and you would rather not go directionally bullish. So I'll talk about that in class 4, which will really wrap up the mastery section for now. Of course, we'll always be innovating, adding, creating, changing, updating, and we're going to be doing it for you, each and every one of you, to make sure that your lives are enriched by this information and you have the opportunity to trade the market and make some money. Ladies and gentlemen, thanks so much for being phenomenal. I appreciate each and every one of you. You guys are absolute rock stars. I cherish you, love you, and I hope you guys have a great day. And until next class, remember, love life, live life, trade it. Welcome to real life trading.